Hey everyone, I need to share something with you. Last week, a dealer I've known for 15 years called me. Not to talk shop, to vent. He said, "John, I've been in this business since the 90s. I've never had to tell customers I literally cannot get the metal. Not at a premium, not at any price. It's just not there." That call shook me, because I've been tracking the data behind what he's experiencing. And the picture is worse than most people realize. A massive amount of silver, enough to fill 400 Olympic swimming pools, has vanished from Western markets. It didn't get consumed. It didn't get recycled. It flowed east to China, and it's not coming back. Today I'm going to show you exactly what happened, why China is doing this, and what it means for every silver investor in the West. But first, let me ask you something directly. Have you tried to buy silver recently? Have you noticed the premiums, the wait times, the items that are suddenly unavailable? If so, you've already felt what I'm about to explain. Before I break this down, let me be clear about what this channel does. We don't do anti-China hysteria. We don't do political propaganda. We follow data, trade flows, customs records, warehouse inventories. When the data tells a story, we explain it. Today, the data is telling a story about a strategic accumulation that has permanently altered the global silver market. If you're new here, welcome. If you've been with me for a while, you know we connect dots that mainstream media ignores. Let's get into it. So, what actually happened? Let me show you. Over the past decade, China has imported silver at a rate that far exceeds its consumption needs. According to Chinese customs records and cross-reference trade data, approximately 680 million ounces have flowed into China that cannot be accounted for through industrial use, jewelry, or investment products. Now stop for a second. 680 million ounces is abstract. Let me make it concrete. Imagine a single silver bar, 1,000 ounces, about 70 pounds. Now imagine 680,000 of those bars stacked on top of each other. That stack would reach over 130 miles into the sky, past the edge of space, past the International Space Station, past where weather happens. That's what's missing from Western markets. That's what China absorbed. And that's what is never coming back. The entire global silver mining output is about 800 million ounces per year. China has essentially absorbed a full year of planetary production into reserves that don't officially exist. While the West debated paper prices and ETF flows, China quietly drained the physical market. Now let me explain the strategy, because this isn't random hoarding, this is calculated. 1. Industrial dominance. China manufactures the majority of the world's solar panels. Solar panels require silver, no panels. By controlling supply, China controls the future of renewable energy. Think about that. Every solar factory in America, Europe, or India now depends on metal that increasingly flows through Chinese hands. 2. Technology leverage. Silver is essential for EVs, 5G, medical devices, and military applications. As the world becomes more tech-dependent, silver becomes more critical. Ask yourself, what happens when the country that manufactures your technology also controls the raw material it requires? 3. Monetary insurance. China holds over $3 trillion in foreign reserves, mostly U.S. treasuries. They've watched America weaponize the dollar against Russia. They've watched assets frozen with a keystroke. Physical silver can't be frozen. It can't be sanctioned. It exists outside Western financial systems entirely. 4. Currency preparation. There's growing evidence China is preparing for a post-dollar world. Hard assets like gold and silver would anchor any new monetary system. Accumulating now, while Western paper markets suppress prices, is strategically brilliant. 5. Western weakness. Western institutions have been net sellers of precious metals for decades. China has been accumulating. They're playing a long game. We're playing quarter to quarter. This isn't fear. This is strategy. So why are dealers panicking now? Let me tell you what's happening on the ground. Remember the dealer I mentioned at the start? Here's more of what he said. I used to pick up the phone, call my wholesaler, and have monster boxes on a truck the next morning. Now, I'm on waiting lists. I'm bidding against people I've never heard of. And when I ask where the metal went, I keep getting the same answer. East. It all went east. He's not alone. Dealers across America are reporting the same thing. Lead times extending from days to weeks to months. Popular products back-ordered indefinitely. Premiums climbing. Because sourcing costs are climbing. Wholesalers limiting allocations. And here's the question. You should be asking, if supply is already tight under normal conditions, what happens during a crisis? What happens when demand spikes and everyone wants physical metal at once? The answer, premiums explode, delivery times become undefined, and paper prices disconnect from physical reality. Let me explain that simply for anyone new to this. Think of the silver market like a coat check at a crowded theater. You hand over your coat, you get a ticket. The ticket says you can claim a coat. As long as there are enough coats for everyone who wants one, the system works fine. But what if the coat check gave out 10 tickets for every coat? As long as nobody actually wants their coat at the same time, nobody notices. But the moment everyone rushes the counter, the lie is exposed. That's the paper-silver market. Lots of tickets, not enough coats. And China has been quietly walking out with coats, real physical metal, while the West trades tickets. Dealers understand this. That's why they're panicking. Not about today, about what's coming. Now let me show you how we verify these claims. Briefly, because I know some of you are already convinced. Chinese customs data, aggregate silver imports over the past decade, minus reported consumption and exports leaves a gap of hundreds of millions of ounces. The math doesn't reconcile. Shanghai Futures Exchange inventory, SHFE stocks haven't increased proportionally to imports. The silver isn't in their visible system. LBMA and COMEX decline. Western vault holdings have been steadily falling. Trade flow data shows that metal went east. USGS confirmation. U.S. Geological Survey data confirms China as a net absorber. Metal flows in. Almost nothing flows out. Gold precedent. China's gold hoarding strategy is well documented. They accumulate quietly, report minimally, prepare strategically. Silver follows the same playbook. The evidence is there if you're willing to look. Now let me address what skeptics say and why they're wrong. Objection 1. Maybe China just consumes more silver than we realize. China's industrial consumption is tracked by industry analysts. Solar production, electronics manufacturing, all documented. When you account for known uses, there's still a gap of hundreds of millions of ounces. That gap is the hoarding. Objection 2. If China is hoarding, why isn't the price higher? Because paper markets still dominate price discovery. COMEX sets prices based on futures contracts, not physical supply. This is the coat check problem again. As long as people trade tickets and don't demand coats, the system holds. But faith is eroding. And when faith breaks, paper and physical prices will violently diverge. Objection 3. Analysts say the market is balanced. Which analysts? The ones publishing reports for banks that profit from paper trading? Look at who funds the research. Then look at what dealers, people who actually handle metal, are reporting. The ground truth contradicts the official narrative. Now, here's what I want you to understand. There's a specific threshold that signals when this system breaks. Watch COMEX, registered inventory. Registered silver is metal specifically available for delivery against futures contracts. Right now, registered inventory is under 30 million ounces. At current draw rates, we could hit 20 million within months. If registered inventory drops below 20 million ounces while open interest remains high, the paper market faces a credibility crisis. There literally won't be enough metal to honor delivery requests. That's the line. That's when paper and physical fully disconnect. We're not there yet, but every ounce China absorbs pushes us closer. Let me be clear about risk. First, nothing here is financial advice. I'm educating you about supply dynamics. Second, timing is uncertain. This could take months or years to reach crisis levels. Third, premiums are real costs. If you buy physical at high premiums, factor that into your math. Understand the landscape before you act. If this breakdown helped you understand what's happening, subscribe. Not for my numbers, for your awareness. Because here's what I want you to sit with. 680 million ounces are gone. That metal is sitting in Chinese vaults, serving Chinese strategic interests. And every day that passes, the remaining accessible supply gets tighter. There will be a moment, maybe months from now, maybe years, when mainstream media runs breathless headlines about silver shortages, when prices spike, when people panic. By then, it's too late to prepare. The people who understood early will be positioned. The people who didn't will be scrambling. I don't know exactly when that moment will come, but I know the direction we're heading. Drop a comment. Watching the threshold or following the flows? It helps new viewers find real analysis, and it tells me you're paying attention. Here's my promise. I'll keep tracking the data. I'll keep connecting dots that mainstream analysis ignores, and I'll keep telling you what I'm seeing. But I want to leave you with this. The West spent decades assuming that paper claims on silver were as good as the metal itself. That assumption allowed China to drain physical supply while we traded abstractions. Now the metal is gone. And paper is just paper. The question is not whether this creates problems. The question is whether you understand the dynamics before those problems become unavoidable. You now know where the silver went. You know why. You know what to watch. Stay informed, stay prepared, and I'll see you in the next update.